Well, I see we only have 2 people listening in. Can you guys hear me? Hello? Anybody?
Hello, yeah, we can hear you.
Awesome. Okay, so for today, I just wanted to come in shortly and show you guys a few things. Then the first thing was to help you realize that there's what we call a demo account with Interactive Brokers. And with this demo account, you can be able to trade on a demo and then practice your trading skills. And then thereafter, you'll be able to be confident enough to trade on the real stuff. Trying to see what this is. I think I did a wrong sharing. Just one moment. Let me share the screen so that I can show you what I'm talking about. Settings. Let's see. Where is this? Okay. I think I found it. This is a screen I want to share. Okay, so if you're on video, you can see this. But on Interactive Brokers, there is this option where there's up here. I think you can see that, where it says live, and then there's Pepper, the one I've highlighted. That's the demo account. So when you click on this little circle right here, and you can see it changes from live account to a Pepper account. What that means is demo account. So if you're looking for demo, you'll never find that word demo, but you'll find this word Pepper. Pepper means demo when we talk about stock market. So on this, when you switch like that, then you can log in with your username and password, and then you get that security notification. You have to approve that. Okay, let me approve mine. Then it will log you into demo account. Okay. So with demo account, you have the option now to trade as if you have the money in your account and be able to do trades here and there, among other things. So like here it says my demo account has almost $1 million. $1 million. So you want to change this value because that's what it usually starts with. So you go to account settings and change that value to whatever you think you can afford. So you say other amount, then put in an amount. Let's say you have 100K, you have to put there like 1,000. That's $1,000, it's 100K. And then you say continue. Then, okay. So now that shows that your account has 100K and you can trade with 100K on demo. Though mine didn't change, that's a different story. But yeah, so that's how it goes. You can use that and then proceed to trading. So now I would like to introduce the trading platform, the desktop trading platform. Let me just switch to that, where you can use a desktop trading platform and be able to trade on your desktop. If you have a mobile phone app, you can use your mobile phone app. It's almost the same thing. So either way, we will make it work. Okay. So if you have the app installed on your laptop, this is what it looks like. I know it's a little bit of a mess, but there's some settings we need to change. On the phone, it's a little bit easier and a little bit better, but let's work with the desktop app. Now, with the desktop, it's still the same thing. You log into your account and all that, and then when you're logging in, you still select demo or paper, and then it will bring you to this screen. Now, under this screen, you see there's a watch list here. So if you have your watch list, you add it here. So something like Facebook, you can add to that list right here. Right. It's yeah, there. So here it says Facebook, and it's a stock. So it's not a CFD, whatever these other things are. It's a stock. So you select stock, and it comes onto your watch list. Now, here's a different story. So let's say now you want to trade. You come up here on this taskbar, and you click on trade, and then you click on what you want to do. Say you want to buy. You click on buy, and it shows up down here. Okay. So this is whatever you want to buy. It shows the account that you want to buy with, and right here is the number of shares. So you select your number of shares depending on how many you want to buy. So as you can see, the value, if you scroll up, it changes. So you can select however many you want, depending on the paper value of your account. So let's just say 80. And then here is where you select the limit order. So you can click on this question mark. It says ensure that your order fills in at a specified limit price or better. Market order is the current market price, and this other one is intermediate, like in between, so something like that. So we usually select limit, and then here we choose a price, or you can just type in the price of the stock you want to buy or sell. Okay, so whatever price it is, I think for me, I had Sophie. That's the one I wanted to trade at $13, 13.15. Okay. This stays like that, and then you're good to go. You select transmit, then accept this, and it brings you to this screen where it says you want to buy Facebook. Okay. Yeah, at that price. I had selected Facebook, not Sophie. Sorry. Let me cancel this. I think what I wanted to do was here at Sophie. This is Sophie. Wanted to buy, say, 100 limit enforcement, time to enforce. You can see here, time to enforce. You usually select good till cancelled, which means it will be active until you decide to cancel it. And then you select a limit order. There's limit order, mid price, market intermediate, all that. I usually like limit order. Then let's say now you can see the prices for Sophie. So this is where it is right now. You can buy it for cheaper or less. What I usually just do, I type in the amount, the value I want to buy it at. So let's say 13. Okay, like that. And then this stays that way. This is the exchange you want to use. So there's NYC. I know people have heard of Amex and all these other ones. Yeah, so I like using that, which is automatic for interactive brokers, but you can use NYC. It's no big deal, like that. And once you're ready, you click on transmit, and then it brings you to this screen. It tells you how much you'll be spending to buy 100 shares of SOFI at $13. So this is $13. You're buying 100, and then routing through the NYSE, good until cancelled. Okay, all that is good to go, and then you just select transmit. Oh yeah, you need to accept this, that thing that pops up there, and then transmit. And you see it says your order to buy SOFI, which is held by the NASDAQ, will be automatically cancelled. It says cancelled at that time. So this is the date. If it doesn't get to your price, which is 13, by 2022 June 30th, it will automatically cancel. Okay. So your order right now it's active and good to go. And if SOFI goes down to 13, it will execute automatically. So generally speaking, that's how you do paper trading. Like I said, if you have a stock, let's say, for example, does anyone have an example we can use? Anybody? Your favorite stock, something you know, company?
Any company?
I can hear you.
Hello?
Yes.
Any company?
Yeah, any company that you want to trade or you wish to trade.
Can we do Twitter?
Yes. Twitter is TWTR. Yeah, there, Twitter. And you don't select these other options. Like I said, there's this stock, then stock for the NYC. You can select stock here, but don't select option, warrants, structured, CFD, or you can use this other option right here. So this is Twitter, NYC, and then I think they have a Mexican exchange. So we want the NYC. Then once you're here, you click trade and select buy, right? And then you select how many you want to buy, let's say 200. And then when is it the time in force, which means how long should it be active? I usually like good till cancelled, because that gives you a leeway so that however long it swings, maybe a target price is a certain price, it's going to go down to that price given a certain period of time. So you select good till cancelled, and then you select limit for limit order, and then you select the price, the one you think it should go down to, which you can scroll on this. So as you can see here, it shows you where the bid and ask is, and which price is below it. So if you want to buy Twitter, you can say, I want to buy it at 35. So you scroll down to 35, which might take long, like that. Find 35, you select 35, or you can just type it in here and say 35.00, press enter. That's good to go. Exchange, like I said before, you can choose any of these exchanges. The major one is usually the NYC. You can use Zero, you can use either one of those, whichever one works at the end of the day. But we like using NYC, so let's use that. Once you're done, you just click on transmit. Then it will give you that attention where you have to accept this order. and it says it's you're not eligible for commission free, all that, accept that. So meaning you will be charged commission. And now on this order screen, it says you want to buy 200 shares of Twitter at $35, routing through the NYC exchange, good till cancelled. That's a time in force. And then here it says how much you'll be expected to pay, which is 7,000. And everything is ready. You click on transmit, and there it goes. Then it says it will be cancelled by June 30th if nothing happens. So that's all there is to trading. And then what you do now is wait for the stock to go down to your price. Like here, it shows you wanted to buy at 35. Right now it's at 35.84. This other one we wanted to buy at 13. Price was like 4,000 something. But anyways, as it is right now, all you're waiting for now is for the price to drop down to your price level and get it executed. Okay, so that's all I had for today, just to show you that you can do demo trading on Interactive Brokers. This demo trading is also available on your mobile app. It's also available on your web browser platform. So either way, you can log in whichever way that you're comfortable with and be able to trade. Do you have any questions?
Yes, Alan.
Yes.
Thank you very much. I was asking where you selected the limit order. What do the other terms mean?
Limit order. So limit order means you want to buy it at a specific price, right? Okay. That's what limit order means. It means you have limited your price to a certain value. So like Twitter, if you want to buy it at 35, that's the price you're limiting the transaction to happen at. Meaning, if it's right now, it says here 35.73, it will not buy Twitter at 35.73 until when it hits 35. That's when you get that order filled. So limit price is like you're restricting the broker to execute your trade at a specific price. Okay. Market. This is called a market price or market order, MKT.
Yes.
This one says you want to buy that stock at the current market price. So whatever the current market price is, that's what you get in. So like right now, it's 35.75. If you select market price, it will buy at 35.75. But beware that because the stock fluctuates a lot, this 35.75 might turn from that to probably even 40 within a few seconds. So if you select market, the current market price might not be the one you're looking at. Given time, it might change. So when you select market price, beware what stock you're trading. If it's a little bit volatile, you might not enter in at the price you're looking at that moment. So give it a second or two, it might change, and it might go in the negative direction. So I would encourage most people to use limit, because limit is you've calculated everything, this is what you can afford to buy this stock at. That's the price you want. But market price can give you any price, and that might cause issues in the long run.
Okay. Thank you very much.
Yeah, so those are the most common orders we normally use, market or limit. But other things come in with other complications. Let's say you want to use a limit stop order, you want to use a stop loss, you want to do all that. That now complicates the whole order process. And as you can see, if you click on that little arrow at that menu option, there is all these other order options. So like this one, STP LMT is a stop limit order. Stop limit order is where you're saying, I want to buy Twitter at a certain price range. Let's say 34 to 35. Meaning, the moment it hits 35, your broker will then wait until it gets as close to 34 as possible. So you're setting a limit, like a bandwidth or a bracket, and say, I want it between 34 and 35. So anything below 35 and above 34 is good enough. So whichever one that will be the best is where the broker will give it to you at. That's what stop limit is. And all these other trail limit is, say you want to buy it at 34, but you don't want to have a maximum limit. So you say, okay, if it hits 34, I want to buy it at the least possible price, and you now use trail limit, which then follows the drop. That is, as the price drops down, that order follows it all the way to its bottommost price level, and then executes the moment it turns back up. So it's like it's following it as you go down. As you go down, it's behind it. The moment it turns back around and tries to go up, that's where you get in at the least possible price within that time frame that you selected. So all this will complicate the whole order process. So if you don't understand what they mean, I would suggest you just use limit, which is you want a specific price, and that's what you get in at.
Okay, Alan.
Yes.
Hello, Alan.
Yes.
I have a question.
Mm-hmm.
So far, we've bought, from the demo account.
Yes.
We bought shares for 2 companies, yeah.
Yeah.
But what I don't understand is how are we going to make profit here? Because provided our ultimate goal is we are buying shares, and at the end we are going to sell them, yeah.
Mm-hmm.
So my question is, how are we going to make profit here? Because whatever I've seen is we've bought the shares.
But you haven't seen the exit.
The exit.
You don't know how you're gonna make profit. Okay. There's let me see what I can show you. Like this Sophie, SOFI.
Mm-hmm.
There is a graph I had on the channel that displayed what it might go up to, or all that nice stuff. Let me just find it and explain how you make profit, or what profits you should be expecting at the end of the day.
Okay.
I think I should just get it from the channel. Open with. Okay. So I'm gonna share now the Sophie chat. Give me one moment here. Okay. It's not showing up. Let me see. Let me share that screen for those who are watching. You can watch, see what I mean. Okay. So this is Sophie, right? I think I zoomed a little bit. Let me zoom in. Okay. Wait, why is it skipping too much? Okay. Right here you can see it says Sophie Technologies. with Sophie, we were looking at around 13, but this is yesterday's. Was it yesterday or the day before? Graph. So as I had indicated, you want to buy around this region, right? Then when you put your order at around 11, 12, around there, and it gets executed, all you have to do now is to wait for it to go up. And as you can see, it's poised to go up from here. So you buy it around this point and it should go up. Now, as I've indicated here, there's a percentages you expect, right? So if it gets to $15, you'll be making around 25.52% if you buy it at $12. So you'll be making 25%. Then if it goes to 18, right, you'll be making 53.84% if it goes to 18.43. So what happens then? What happens is, as once you've bought the stock will start going up, and then you'll see the percentage growth. It will start from like 0, and then 1%, 2%, 3%, 10%, 20%, depending on your trade plan. That's why I usually insist that you have a plan. What are your expectations? What is the goal? You're buying this Sophie at 12. What do you expect? Are you expecting 10%, 20%, 30%, 40%? So if your expectation is 10% and this thing has gone up to 10%, what do? You close that order. If your expectation is 25%, you wait until it gets to 25% and you close that order. But sometimes you might not get to the price that you are looking for. So it's usually advisable that, say you're looking for 10% and you've gotten to like 9.5%, that's good enough. You can exit at 9.5 and then try again next time for the next stock to meet your price. So once the stock gets to the price that you want, your orders will show up right here where you say close positions. As right now we don't have any position open, so it doesn't give us that option to close a position. But once you see that you've made your 10%, your 20% or whatever, you come here and say close selected position. If we had an active one, we would have just selected that and closed it. And that will close the transaction from buying to the end. And then you'll now make your profit at that point. Does that help?
Okay. Another. Okay, Alan.
Yes.
Looking at that graph,
mm-hmm.
how do you know that at a particular time, the market will go down or the market will go up? That one. How do you know that?
This is from analysis. It's something called there is fundamental analysis and technical analysis. Okay, so that's a topic of another day, but I'll just briefly look into that. This is what shows. Okay, so I usually recommend you use what we call TradingView for charting. Okay, to get the chart, because this is a free platform. You can access it whenever, however, on any. They have a mobile app, they have a website, they have all this nice stuff. So under TradingView, let's say is this still loading? I think it's still loading. Okay, so on TradingView, let's say you've come across something that I've recommended, for example, or you've seen it somewhere. You're like, oh, let me analyze this thing. Let me see what is going on. And then you say, okay, I want to analyze Sophie. You type there Sophie, SOFI. It gives you the SOFI technologies. Make sure you're selecting the NASDAQ, because all these other ones are like in different countries and whatever, all this other stuff. So the one that is NASDAQ or NYSE is the one you select, but it has to be SOFI Inc., not ETF or dividend or all this other stuff. So you select that like that, and it gives you a graph. Then on this chart, what you want to know is when is it going up, when is it going down. And one of those ways you can know is using what we call indicators. So under here, you see there's indicators, okay? And there's a lot of them. Like you can see, you can scroll all the way. There's a lot of them. So you have to know how whatever indicator you want, whatever indicator you have works. And for the most part, I like using this relative strength index, RSI. So you click on RSI, and RSI comes onto the screen right here. Let me close this other one. Okay. So with this, it shows you when the market momentum has either peaked or is getting started. So when the RSI is down low here, it means the momentum has stopped and is about to just pick up. That is, if it goes below this value, there's a 30 on the RSI scale right here. There's this scale 20, 30, 40, 50, 60, 70. So RSI works this way. There's a band to which, if it's within that band, there's something going on. But if it goes beyond that band, either below or above, then you know something's going to happen. For example, right now, SOFI has gone below 20 RSI, 30 RSI, which is the band in purple right here. What you do is you say, okay, what it means, not what you do, but what it means is, if it's below 30, it means a lot of people have sold SOFI, and now it's about time for more people to start buying SOFI. And this is a region we call oversold. Like a lot of people have sold it, and now it's oversold. And then from here on, people are going to start buying this stock, as long as it's below this 30 mark. Now, if you go back here, it's at above 70, and above 70 is where we call overbought. And by that, we mean a lot of people have bought this stock, and now it has reached a limit. As you can see from where it was, right? It came all the way down there. It came all the way down here at 12.71. It went all the way up. And guess what? When it reached the limit, which is the RSI above 70, you can see it dropped, right? Even here, the moment it crossed that line, there was a sign of slowdown. It slowed down a little bit. Then it crossed down that line, it started picking up again. And then it went above the line and it stopped and started dropping. So this is a point where most buyers are no longer buying. That's why it's called overbought. And at this point, if you had bought the stock, all you have to do now is sell. The moment it hits this high, you sell. And then it will drop and keep dropping, and something will happen, it go up again. But until it hits oversold down here, so everybody who was buying over here, all the way over here, it has now started selling from here, going down all the way to where it is right now. And the market indicates that most people have sold the stock. And now what is left is more people to start buying. And this is the indication. That's why it's called an indicator. It indicates that more people have sold it. Now they are ready to buy. So if you want to buy, you can buy right now. And that's how I know when to buy and when to sell. But that's just a simplified version of technical analysis.
Okay.
Yeah. So fundamental analysis is when now you start looking at the books. That's what we usually call it. How much profit is it making? How much credit do they have? Debt to income ratio? All those things. That's fundamental analysis, and that's another topic. A topic for another day. It's a huge thing. But this is what happens when you learn this stuff. You learn over time that there's some things you don't know, and the more you know, the better. So over time, you'll get to realize a few things here and there, and it will help you out. Okay. As you can see, we said we want to buy down here, and if you had bought at 1290, right now it had gone up to that point. Let's see how much. What percentage was that if you had bought down here? That's 0.4%. That's 0.4% in 5 minutes. So you can see the American stock market is really active. You can buy something today, and by the end of the day, you would have sold it. So the whole point is, given time, if you know how these things work, you'll be making money by the day, by the hour, by the minute, whichever way it is that you wish. American stock market can grant you that option. Okay. Any other question? Yes.
When you have indicated that it's good to buy,
yes.
Do the broker continue buying until your money is exhausted, or does it limit you to the number of shares?
So when we are here on the broker platform, you select the quantity, as you can see here, quantity. So if you want to buy 100, and you have, let's say you have enough money to buy 1,000 shares, but when you're making the trade, you only want to buy 100. The broker will only buy 100. They won't buy until your money is exhausted in the account. The broker will only give you however much you want. Okay. So if you want to buy 100, the broker will only buy 100. If you want to buy 200, the broker will only execute for 200. They won't buy more than you asked for. That's what their job is, to make sure that they give you exactly what you want.
The second question, how long does it take for the settlement in Interactive Brokers?
It's instant. You buy, the moment it says you bought the stock, it reflects immediately, that instant. And the moment you sell the stock, it reflects immediately. Okay. So it's instant. And I think withdrawing the money is the one that takes like 1 day, T+1. So you sell today, you can get your money tomorrow, something like that.
But you can sell, and when the money reflects immediately, you can buy another stock.
Yeah, that's the point. The moment you sell right now, the money shows up in your account, and it says funds available for trade. And that's how much money you'd have to trade with. So it will reflect immediately.
Oh, that is very interesting. Okay, thank you.
Yes. Any other person?
Thank you, Alan, for all this information which is coming in at the right time. I might miss this. You can set the limit for buying, the entry. And this exit, is it as well? You can automate it. Like it gets to be 10%, 7%. I want out.
Yeah. So that's where you have when you're choosing your order type, which is this order type right here. You select some of this stuff, but on the web platform, it's a little bit better. And I think my platform right here, I've not set it to I think I should have that session where I set my platform to where it can work better for you. You can see a lot of these things. But generally speaking, you see how many order types there are out here. There's a limit order, market order, and then there's a stop limit order. There's all this. When you're making an order, there's also a chance for you to make a stop loss, which protects you from losses, and a take profit, which is the moment you make your 7%, 10%, 20%, automatically it gets you out. So that's under the order option. And as the system is set up right now, it's kind of complicated to get that to show. But I'll come back with, after I set up the platform, to a point where I can show you exactly how to do that. So when you're making the order, you select a limit order, and then you put your prices and everything. And then I know the next option is, if you want to sell it at a certain price, you can choose also when to sell it. And if you want to protect your profits to a certain your account, whatever the trade. So say you don't want to lose 5% of your value in that stock. You can say that's what we call a stop loss. You say, I don't want to lose more than 5%. So you put a stop loss at 5%. And then you say, if I get 10% profit, I want to exit. And then you can put your take profit at positive 10%, stop loss at negative 5%, and you leave it there. You can leave it there. You go about your day. You do whatever you're doing. So when it hits your take profit, it automatically gets you out. And when it hits your stop loss, it automatically gets you out. So when you go and see that there's a notification on the platform, it will either tell you you've made your profit or you've made your loss. But there's other orders like this is called trail limit. So once you set a trail limit, you can also set a trail limit for take profit, which means as the stock goes up, the stop loss also moves with the movement, right? There's that option too. So let's say you are here at Sophie. So you buy here at 12.90, and then you put a trail. A trail means it follows what is happening. So as this goes up, your stop loss is behind it, following. As you go up, it follows. As you go up, it follows. And then maybe you get up here, and your trail stop is below it. So you are at, let's say, 12.98, and your stop loss is at 12.97. So you see this red candle, the moment it goes below 12.97, it takes you out automatically. So there's all those options, and the more you learn, the more you'll know how to use them.
Thank you, Alan.
Yes.
Hey, and Alan, does it mean that you have to be time conscious, especially when you're buying the shares?
What do you mean by time conscious?
As in, provided that the market is moving and maybe at the rate at which the market is moving, yeah. So do you have to be fast? I don't know if you're getting what I'm trying to ask.
You're breaking. You say, do you have to be what?
As in fast, being very fast, yani, when you're placing the you're buying
that's
the shares.
When you select like a stock that is really moving fast, that is volatile stocks, you have to be fast. You have to make calculations. That actually suggests that you do your research or whatever analysis before time, right? You do your analysis before time. You know, okay, I'm going to buy Sophie at $13. That's a good price. I'm willing to buy it at that price because I know it might go to 15. So even if I buy it at 13, there's no problem. You put in your calculation. You say, okay, I have $200 in my account. I want to buy Sophie at $13. How many shares can I buy? It turns out it's around 15 shares. Now you know if I'm going to buy Sophie at 13, I can only buy 15 shares. And when you come to the platform where you execute your trade, you know exactly what you're going after. You know how many you want to buy, which is the quantity. You know the transaction, first of all, you want to buy. You know the stock is Sophie, so you type there Sophie, put in the symbol, select buy under trade, select how many, which is a quantity. You know already it's like 15. Select a limit price. You know you want to buy it at 13. So you do this before time, and then you submit that order. Now, once the order is active in the market, all you have to do is wait for stuff to happen. Okay. Instead of being there looking at the screen like this and saying, do I want to buy it at 12.90 or 12.98 or 12.85, and you're there doing several calculations at the same time, that will confuse you. I would rather you decide before time that I'm going to buy 15 at $13 because I only have $200 in my account. And that's all you do. When you go to place a trade, you place, and you even place your stop loss, you even place you've calculated, okay, at 13, if I want to do 10% profit, that means I'll be looking at 14.3. So you put your stop loss at, take profit at 14.3. And let's say you say, I don't want to lose more than 5%. You say, my stop loss will be at around 12.35. So you know all that. You write it down before time, so that when you go to the platform to make the order, you just copy and put in those numbers and hit submit, and everything will be automated from there on.
Okay. And
yeah,
going forward, going forward, so will you be providing the recommendations, or I don't know? Yo?
I've been having issues providing recommendations, given that there's only a few people who are actively trading right now. Majority of the people, like 90% of the people in the group, are not trading. So it befits the point to keep giving recommendations when I know exactly who is trading what. Okay. The reason as to why I was giving so many recommendations was, okay, if you cannot buy Sophie, there is another one for you can buy. If you're not buying that, there is, there's a couple you can choose from. But given where people are, most people don't have accounts yet. Most people are struggling with understanding what trading is all about. Most people are struggling with their expectations. What do they expect at the end of the day? What is their plan? What is their idea of their goal at the end of the day? I'm having trouble to keep posting recommendations while some people don't even understand where they want to go. So I'll be posting recommendations, but not as many as I used to. And privately, if you're trading, let me know that you need recommendation, or I can help you create a watch list, and you can use that to make trades on your own. My goal is to make sure that you understand what trading is all about, and you can be able to execute trades on your own from here on. Because if you live by my recommendations, that means if tomorrow I fall off the face of the earth, you'll have trouble managing your way forward.
Okay, get you. And what about the minimum capital? The minimum how much do you recommend someone to start with?
Okay, my recommendation is you can start with something $200 is my recommendation, because below that it doesn't make sense. $200 is 20K, around 20K Kenya shillings. Knowing the American stock market, the stocks vary from a few cents. That is like 0.5, 0.2, 0.3 of a cent, which is like 50 bob, 60 bob, 40 bob, 30 bob. Yeah. And they go up to, 44,000. I think that's what Berkshire Hathaway stock is. I think it's like 44,000 something by now.
Oh, hello.
Alan, we lost you.
Alan.
I think he's gone. We can't hear anything.
No problem.
I think there's a problem somewhere. I think we are not hearing anything.
Alan, we're not getting you.
Yeah?
Together.
Guys. Hello?
Hey, Alan, we are getting you.
Are you getting me now?
Yeah, we are getting you now.
Yes. I'm having a technical issue. My laptop, I think, it has been running a lot of stuff. So, as it is right now, I think I'll only do a few more minutes and then end the whole thing, then sort out the issue. Okay, so where was I?
The minimum capital. You can start with.
Yeah, I was recommending around 20K, which is $200. And with $200, you can buy stocks that are between $5 and $20 and be able to buy around a maximum of 10 shares. And that can give you some sort of, the first steps of you getting started. And then you can be depositing, let's say, 10K every month and keep growing your portfolio. So that's the minimalist. If you're starting from the lowest possible end, you want to grow your account, you can start with that. But ideally, if you want to grow your account a little bit faster, a little bit moderately, I would suggest you start with like $500, because 10% of 500, that means you'll be making around $50 per trade. And if you do, let's see, if you do 4 to 5 trades a month, that is, you're making around $250 maximum, which is 25K a month. So that would be a good starting point based on the expectations and the results.
Okay, I get you.
Yes. Anyone who has a question?
Yes,
I didn't get that. How much will give that amount?
What?
I did not get that point. How much will give that amount of 25,000 per month, roughly?
$500 if you're doing 10% and you're making 5 trades a month.
Okay.
Yeah.
Okay.
Okay. Someone else had a question.
Yes. I managed Alan to set up the account today. How long will they take now to activate it? Maybe from paper now to the real account? Or how does it happen?
Your documents have been accepted, or you're still waiting for that?
I think I left it at a point whereby they were to review.
Okay. Review usually takes around 24 hours maximum. So it should be done by tomorrow, I think. But for the most part, the moment they approve your documents, you're good to go to fund your account.
Okay. So I'll just have to use the normal, like the demo account.
Yeah, the demo is for training purposes. Given that most people don't know how to trade in the stock market and you don't want to risk your money, so I'm suggesting you start with the demo just to get you situated. Then once you're comfortable trading, you know exactly which buttons to push, then you can go on a live account.
Okay, thank you.
Yes. One more person. Okay, if we don't have anyone else to ask the question, I think it's a good point to end the whole thing and then call it a day. So thank you all for listening. Thank you for showing up. It was a quick one, and maybe most people didn't get to notice that there's a thing going on today. This thing will all be on video. I'll submit the video link on the channel. So thank you all. Happy investing. Get your accounts ready. Get your money situated. Wish you all the best.
Thank you too.
Thank
Good
you.
night.
Thank you. Bye.
Bye.
Thank you. Good night.